How is it that Amazon, Tesla, and Fortune 500 giants report billions in revenue and pay almost nothing in taxes? What if I told you that you, as a small business owner, real estate investor, or entrepreneur, have access to those very same tools? This isn't tax evasion, it's smart, legal tax strategy. Welcome to the world of depreciation, amortization, and Section 179. And welcome to corporate Citizens LLC, where we help everyday Americans transition from employee to employer and onward to investor. There's never been a more important time to understand these tools. Thanks to sweeping tax reforms in the One Big Beautiful Bill Act of 2025, business owners now have a rare opportunity to write off nearly all capital purchases in the same year, to improve cash flow, to slash tax liabilities, legally and powerfully. In this video, we're unpacking everything you need to know about Section 179, bonus depreciation, amortization of intangibles, entity structure, and strategic planning, and how to turn multi-year expenses into immediate tax write-offs. Let's start with Section 179. It's like the business owner's get-out-of-tax-jail-free card. Instead of spreading your equipment cost over 5, 7, or 10 years, you deduct the full amount in the year it's placed in service. In 2025, Section 179 allows up to $2.5 million in deductions, phasing out after $4 million in purchases. This applies to equipment, software, office furniture, improvements to non-residential property. That means if you invest $200K in new tools, CRM systems, or a fleet of trucks, that's $200K you may not owe taxes on. Now here's where things get interesting. Bonus depreciation, also called additional first-year depreciation, lets you deduct 100% of qualified property costs, with no income limitations. Thanks to the new law, 100% bonus depreciation is back and permanent for eligible assets acquired and placed in service after January 19, 2025. Even used equipment qualifies. Yes, even secondhand gear bought off Facebook Marketplace might be deductible. That's not just powerful. It's game-changing. So, should you use Section 179 or bonus depreciation? The best answer? Both. Use Section 179 for predictable income years or when you want to control deductions by asset. Use bonus depreciation for larger CapEx when you're aiming to lower current year profits fast. Smart businesses use a mix and align it with cash flow, growth projections, and entity structure. That's what we help with at Corporate Citizens LLC. All of this works best when paired with the right business entity. S Corp, C Corp, Single Member LLC, they each handle deductions and losses differently. For example, C Corps retain earnings, but may lose pass-through treatment. S Corp was pass income to shareholders, meaning large deductions can directly reduce personal taxable income. LLCs offer flexibility, but watch for self-employment tax implications. That's why choosing the right entity isn't just paperwork. It's tax strategy. Most people focus only on physical assets. But what about trademarks, copyrights, patents, goodwill from a business acquisition? These intangible assets fall under Section 197 and can be amortized over 15 years. That's a steady tax deduction year after year. And if you're acquiring brands, IP, or digital assets, amortization can be a powerful tool. Imagine this. You're a real estate investor who buys and renovates a duplex. You spend $150K on improvements and $50K on marketing and a rebrand. With cost segregation and 100% depreciation, your tax bill just dropped drastically. Now add amortization of your new brand assets, and you're leveraging both sides of the tax code. This is the kind of strategic layering we build into our clients' plans. Before you run out and max your business credit card, remember recapture rules. Sell the asset too soon, and you may owe taxes on the gain. Not all states follow federal rules, so check your local laws. And the Section 179 deduction can't create a loss. It only applies to income. The point? Plan smart, not reckless. That's where we come in. At Corporate Citizens LLC, our mission is simple: to help you transition from employee to employer and onward to investor. We help you structure smarter, deduct more, and build wealth the way the big guys do. Subscribe to this channel. Visit becomeacorporatecitizen.com or call 516-476-8204 to start your entity or tax strategy consultation today.